The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this last day of October, October the 31st. From tomorrow we start a new month. We'll talk about candles. We'll talk about a lot of things. Talk about my webinar coming up on Wednesday night, but let's first get to the numbers. The Dow is down 3 at 18,157. The S&P is up 2 at 2128. The Comp Index is up 3 at 5193. Gold is down 3 at 1273. You've got silver up penny at 1781. Copper is still in the 220 area. It's actually up 1, so it's in the 220 area. Crude oil is back at 47s, 47.46, down $1.24. Bonds are up a half a point to 162.21. You've actually got some very interesting things here. The GDX is still, you know, the gold stocks and gold miners, the GTX, holding quite well. I mean, in my webinar, I'm going to be discussing gold. We'll be discussing the dollar. Dollar right now is trading up 30 cents at 98.65. You see this chart right here? On the left, I've got the daily, and there's that arch formation. Remember, in the Chapman wave methodology, we've got arch formations that look like a lowercase h. They can turn into lowercase m's when they continue to the side. This is what I show my subscribers. So for my webinar, you'll get 30 days free to my opening call. That let me tell you, that is a lot of work that you'll be getting besides the webinar. So the sooner you sign up, the sooner you get my you'll get into the groove of my newsletter. This is what we do. I show every day. I show this is a little bit more comprehensive than usual. Here I've got a 4-panel look at the E-minis. This is the December E-minis. Actually, this is a continuous contract. Trades at exactly the same price as the at this point at the E-minis. And I show there's the daily, there's that arch formation. Right at the top, just above there, you'll see there's that lowercase h that's forming in the weekly chart of the E-mini. The monthly chart is still very good. It's made a leg B and then a peak B. So whatever it does this week, it's still a peak B from last week's lower high bar. And the technicals are pretty good. And here's the 120-minute chart. And what I want you to show is, look how long, from the middle of October until now, this is a 120-minute chart. We've just been stuck in a range. They have been able to keep, whoever they is, they's been able to keep the Dow above 18,000, but they's also been able to not push it much higher than the 18,000, somewhere around the 18,290s to 18,000 low 300s. That's very interesting. And this has just continued, and I'm suspecting that it'll continue for a little while longer. So within that context, let me show you something else here. Let me see what this is. I always show GE. GE has had a nice day today. They have a 60-something% position now in Baker Hughes, BHI, oil, and it's a partial play underway. Had a nice spike. I made a little bit extra, higher high than that to a leg B. Probably going to make a peak B by tomorrow. But in the meantime, look how General Electric is held. I discussed this, how General Electric is holding that up channel support, that dashed line right there. And the monthly chart is only at a peak C. It should go to a D at some point. Within the context of what I'm looking at, let me see, what is this next one here? This is while I'm preparing my webinar. So let's see, should we put that in? I can't even remember what that is. Doesn't matter. So we'll go to the next one. This is the QQQ series. Hey, look at this. I discussed the QQQ series in relation to the Chapman wave methodology. By all my calculations, we've made a peak E, a right arm extension or a rogue wave formation that spiked up to the 119.66 area a few days ago, given back a chunk of that, and that says to me that we could either be in a sideways trading pattern or, and this is where it gets very interesting, this is a leg F in the weekly chart, but so far it's holding very well, and it's holding above the 9-period exponential, or just right on the 9-period moving average. And the month, that's the weekly chart. The monthly chart is great, and the 120-minute chart said, hey, you could have a little bit of a bounce here. I give this every day. I give a whole bunch of information to those people who are either trading or looking for positions. What is this one here? We won't go to that one. Oh, yeah, I wanted to show this one here. This is Nokia, which is Northrop Grumman. If you look at all the components of the PPA, which is the aerospace and defense area, you'll find that while the monthly chart of that particular ETF is very strong, individually, some of these stocks are really close to pulling back. And this is going to be what I talk about in my webinar after defense. What's going to be happening in defense? Very important. Here's Charles Schwab, corporation broker. I talk about we have no position in this. I'm talking about it as to say, if there is going to be another very sharp move to the upside, I would expect this time that the brokers really start to extend to the upside. That makes this very important for resistance and support where it's at right now. It's showing it's okay right now. The monthly chart is actually improving a lot. I talk about that. That was over the weekend. There must have been, I don't know, 18, 20 charts? I don't know how many charts. I just kept doing this. This is one that we are short still. What is it? Edwards Life Sciences. Shorted up at the 120-140 area. It hit 91 on Thursday and Friday. We expected a bit of a bounce. Now that bounce is kind of fading. This just goes on and on and on. If you want a comprehensive look at the markets, I try my absolute best to do that. Here's the DBC. This is one of the commodity indexes ETNs that we have. Had a very nice gain. Still have a gain. I'm a little concerned that it's making a peak in the daily, and the weekly chart is fading as it says a high-level consolidation. I'm impressed that the monthly is starting to improve so much. Where else are we? DBC. Another one that we go. Yeah, every day. I show whatever I think is very important. In this case, it's the housing index, which has made a peak D in the weekly. In Chapman Wave, we look for Ds. There's a D there. Look how sharp we pull back after that. And what we look at is what happens at that particular instance. In this case, the HGX, the Philadelphia Housing Sector Index, is pulling back very sharply. But what's interesting is wood, the global iShares of the forestry and timber ETN is holding very well. So we have dichotomies all over the show. Now let me go here, see what we got. Oh, I showed the chart of my triple weekly chart, my triple yield chart. This is the 20-year. This is the 30-year yield, the white one. This is the brown one, is the 10-year T-note yield, and this is the 5-year. And I said that they've gone to leg D in the weekly chart of the 30, leg E in both the 10 and the 5. We could have a bit of a pullback here. If we have a bit of a pullback and bonds rally, is that saying that we might see market weakness? I'm trying to tie this whole thing together for the webinar that I'm giving. And here's another one. This is my daily. Every day we do this. I show the Dow chart, the 120-minute chart of the Dow. On the weekends, I do the overall picture, the daily, weekly, monthly, because the month is finished. So that was a very comprehensive look at the monthly chart. Month finishes today. And here's my overview. I discussed a leg F going to a peak F in the 120-minute chart of the VIX. That says we might have a little bit of a rally attempt as the VIX pulls back just a little bit. Hey, we'll see what happens here, because this is very important. 1735 was the high on Friday. So this is a very comprehensive look at the market and what I expect on the day. I'll be right back straight off this message and Basil Chapman, Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I forget, I meant all last week, I meant to mention this. There's a play, if you haven't had enough of the ups and downs of the election, there's a fantastic play going on right now. It's called Warrior Class. And it is really well done. I think it's an excellent play. It's well done, well acted, and goes into the real dirty part of politics as if there isn't anything else. But it really, I enjoyed it as a play. And it's going on right now. That's it. And I would have mentioned about the Boston Symphony Chamber players on Sunday afternoon playing, and I should have done that because they played a fantastic concert. Well, it's gone. Too late now. But what a great resource we have here in Boston. We have so many things. It's fabulous. All right. So this is the 10-minute chart real quickly. You've got a cup formation that fails on the right side, right shoulder failure, comes back down, and now there's another attempt. And what's absolutely fascinating to me is by every other mean. Let me think. Let me follow through the one thought that I had. Under all conditions, what I discussed with subscribers, and one of the reasons why we just got out of short positions on the indexes themselves, is that it seems to me that there is a force out there, because every other technical indicator says that this market should have had the Dow in the 17,700s, at least just about another 300-400 points down. The S&P should have been 30 points down. It's been held up, propped up, and I don't care what it is or why it is. That's the way it seems to me. The VIX is up in the 17, hit 17s this morning, and this market goes up 4 points in the Dow, 3 points. Something's going on internally, and I'm not going to fight that. That can go on for another week. Remember the sideways pattern we just looked at in the 120-minute E-mini chart? And under all those conditions, even Friday's bombshell, and the market just collapses and then comes whoosh, coming back. Be careful here. Don't get overly aggressive on any side. But if you've got individual stocks, that's different. But in the indices, they are going to keep this market stabilized. It's to everyone's interest in the administration and anybody that has anything to do with the administration to make sure that no matter what happens, I don't care whether it's Republican or Democrat, this is what parties do. They do everything they can to keep things as stable as possible going into an election phase. And that's what we're seeing. So be careful. XLU, I was told, what was the, Basil, check out the stochastic on the XLU, above 90%. Hey, this XLU is up a dollar at 49.48. That's the S&P Select Spider Utilities Fund. That is a whopper, 2.13%, biggest up move it's had in a long time. We've had a couple of these things on the downside, but not to the upside. And that's really important. And that really speaks to what I'm saying, that you've got to think of this market as a sideways market, fantastic for intraday trading. I mean, just look at the moves that you've had in this 10-minute show. It's just unbelievable. Even if you don't get them all, if you get just a couple, it really is to your benefit to be able to watch things on a shorter term, just to know what you're looking at and why you're looking at it. It's because of this particular phase. Don't think that there's a 300-point smash to the downside just yet. I would not be surprised if it's in the cards, but it is in the cards right now. So the XLU, yes, very strong action. Is it a buy? I'm going to suggest that at 49.49, you kind of missed by 1.5 points. You missed the best risk reward. Therefore, if you want to be long, you could just take a small position in the XLU at 49.51. I would only treat it as a small position, and if it keeps going up, that's fantastic. If it goes down, you just got to have a stop at a 1 point stop, a 1.25 stop at this point should work beautifully. And I would stay with a small position. This is still just the weekly chart. The technicals are only now improving, so this could fail. And I've got it as an F/B. Let me make that a B in the daily. Why? Because the stochastic and MACD are so strong in the move up that you've had over the last week that I do have to consider it could have recycled. AB, it's not an instant restart, but it could have recycled to the upside. Okay, that's it. Now I need to talk about a couple of things that I consider to be really important. Within the context of sector rotation, let me just go to this chart right now. Here is the Dow 120-minute chart. Even with the arch formation, it's been able to be contained. It hasn't gone to 4 yet, and 4 would start. It really can only start at 17,958 in the Dow. So this could be a total failure for my Chapman Wave 5s, but it's worked very nicely for the arch formation in a sideways action and reaction. I want you to just do this, if you don't mind. I'm going to go to back to the Qs just for a second to say, look, the QQQ series is acting very weak on the daily basis. If you look at the weekly chart, you see these nominal news highs, 119.22, 119.46, 119.66. This is all saying you're using a tremendous amount of MACD momentum and stochastic torque, and you're not going to substantially new highs. Not only that, you've got an uptrend resistance line right here, and that resistance line is saying that within the context of trend lines, over the last month and a half, it hasn't been able to get close to this line. That says to me that it's now acting more like a repellent line, or a propellant line to the downside rather than a magnet. I'm going to make it red just for this particular discussion right now, red. I'm going to make it a little thicker so that you know what I'm talking about, much thicker. That line, and I'm going to open this up so you know what I'm talking about. I'm talking about the Qs. That line has seen trading above and then trading below. And until it starts to trade above, I love this. This is like the barbecue line. That's a new expression. I just never spoken about it in that context. I've spoken about it in other contexts where you've got your spit like that and you've got all the stuff at the bottom, but you need to have stuff on the top. So you've got an equal weighting and you haven't got to the top. And that says you can't even get to the top until you break into the 123s. That's 5 points higher. I think we have a bit of a correction before that. That's what I'm thinking. And if you look at, you remember I did Amazon charts. I'll just do them real quickly. AMZN. I'm going to be discussing this in my webinar. So if you've got these very big high beta stocks, I'm going to try to deal with not all, but I'm going to grab a couple. And I'm going to show you. This is Wave 5, Chapman Wave 5, and a peak F in the daily of Amazon. This is 5 in the weekly, and a peak D. It's a leg F. I could alternate it, call it an F/B. I'm going to give it just I'll start off November, give it a few days, and then I'll make a decision whether I think I should call it F/B because the MACD and stochastic is so strong. And where else can people go during the holiday season unless we see a sharp decline in actual gift giving, which is not impossible because if you look at the housing, look at the housing. Housing, I showed you earlier on. Housing, that weekly chart, peak D, monthly chart has an E. Oh, it disappeared. It should say E/B. That's right. Yep, it does. E/B. And the daily is really taking a big hit to the downside. So, and if you put that together with, look at Ford, not good. Look at General Motors, not good. Look at FCAU, that's Fiat Chrysler. That's had a very good rally. That's been on my list for a while. I forgot all about it just while I looked at it. I'm going to talk about that in a moment when we get back. I think there's not that much money around. And credit card expenses, I showed it the other day. Big. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello, it's Basil Chapman. So I had a question. Wow, if there are that many charts, how do you figure out what to do? Let me just show you. So this is October 31st. I grabbed all the charts that I started doing on Saturday and Sunday, and I put them all in today. So you were just getting them over a period of time throughout the day and night over the weekend. But it turns out there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, about 22, 23 charts, right? But This is only what you're interested in. And what I do with my Trader's Corner, which is the last chart that comes out every day, the headline just gives a summation of exactly what we're looking at, why we're looking at it, and then we go on to the positions. Then within the Trader's Corner, I have like the TLT. We don't often trade the TLT, but I do the parameters. I say what it's doing. The same with the GLD. We don't often, if we do trade gold, we trade a different vehicle. And if we do trade it, stock, that's different. But I give the GLD parameters in relation to what it's doing in relation to the dollar. Look at the dollar, how spectacular this has been. It's just, look at it, strong day today at 98.64. I think it's going towards a leg D, 100.52 or higher in the monthly chart. So that's really what I'm looking at. Now, the work that I did over the weekend, the reason why I like to do that kind of work is because I like hands-on operation. If it's automatic, I've got, where is it? No, I don't have it here. I'm just going to get out of this here. And I'll show you. I have this generated in automatically. But I just find that I need to do it in a different way. I need to do it as if it's a seat of pants operation, not seat of the pants by chance. I mean, like sitting in a go-kart, you're really close to the ground. You know exactly what's going on. And that's what I really like to do. And that's the same thing here. Look, I'm looking at the, this is the automatically generated, the projections of the support and resistance levels. So let's see what we've got here. It'll pop up in a second. There it is. This is the dollar, the DXY, the dollar. See that green? The green is still in a very bullish mode. It should have this as well. There's the 120-minute, there's the 10-minute chart showing 98.66 to 98.65, 98.64. All of this is resistance area. Where's the dollar right now? Stuck kind of at 98.66. If it breaks out, that's really important. Then the 120-minute chart, which also has 98.68 as resistance, doesn't have anything until you get to the 98.95 level. That's the way it works. And the weekly chart, we've broken resistance points. And the dollar monthly, you've got 99.97 and then 103.56. So I can do that. And that kind of, in a way, sometimes I just spend a little time over a weekend and I check them out. But my work that I do with the Chapman Wave methodology, this is just a confirmation of anything. I don't necessarily use it just as a generation of targets. If you're looking at, remember I said the QQQ series, look at this. QQQ series, look how much resistance there is in that whole area of the 119s to 120 to 121.25. Tremendous. Look how little support there is. And that's saying that the Qs could still go over a period of time towards the 121s. That's not a problem. And if it breaks that, you've got 126s as an upside ultimate target. But I'm going to be discussing this on Wednesday night in relation to what did we do? Why did we do it? What am I expecting from the elections? What are the charts telling me about the presidential contenders? And what is historically, what have I been discussing? Is there a follow-up? You remember last time my webinar was titled New Highs to Come? And we got to new highs even before the webinar. And this one is to say, because I'm in monthly buy mode in the Chapman wave, I'm not interested in any other technique right now. This is my technique. We're at C in the monthly chart. We're at only peak B in the, here we go, S&P. It's one letter away. And that says that the Dow is likely to go to an E while the S&P goes to a C and a D. So it's one behind, and that's actually very bullish for the market. So I'm looking at this and I'm saying, well, where would it break down? Well, you'd have to close in the S&P way under 2,000 to even start to get a sign to say, oh, man, how's that monthly ever going to get back again? So I've got the parameters. We'll talk about them on Wednesday night, what you can do, how you can prepare. There's a certain sense that I have that the next really big sharp decline, I want to think. I don't have to do it. I want to be thinking. Don't get nervous. Think about whether you're wanting to buy or whether you're wanting to sell. Because my technical work in the charts that are really important to me, and that is the longer term charts, is saying very clearly, hey, there's some very good things going on in this market. And as long as we can rotate corrections, look at the IBB. What a monster correction after the incredible move to 400. it plummets down to 240, and now it's trading down 2 again today, down at 258. How is this going to work? How's the PPH, the pharmaceutical? They're getting hammered as well. So wait a minute, are they getting ready for a big buy signal? Or are they saying, hey, we're done. We had a spectacular move. We're kind of done. That Chapman Wave huge Roman candle of August of 2015 right there. Are we going to fill that? We're already, this is the technique I have, that if you start to fill half of it, you've got to be expecting to go down all the way to bottom. At 52, we're going to 45 in the pharmaceutical, Van Eck Vector Pharmaceutical ETF, trading at 52.16. These are the questions I'm going to try to answer. Now, it's only an hour and a half, and I've asked subscribers to send me questions beforehand if they want me to deal with it. I'd like to get as much done. I'll always have a little discussion period afterwards, but I really have a lot to do. And a lot to do because we'll only have from Wednesday night, so we'll have Thursday, Friday, Monday, and Tuesday, 4 trading days, and then we get the election results. What I'm doing right now is suggesting that the market is giving us a lot of information about this coming election results. And will it be right or will it not be right? And we'll see about that. Okay, now, a couple of things that I got asked about. Yes, I opened the charts up. I was just showing that my work so that you could see it, what I do every day and every week. Every day, maybe I give between 6 and maybe 7 or 8 charts a day. But most importantly, my Trader's Corner just sums up. If you don't have time, you don't have to read everything. I know a lot of people do have the time. They make the time because I try to give as much information as I can. I'm going to spend quite a bit of time on the VIX index, although I really shouldn't at this point. We've done this for years to say markets tend to fail when the VIX is up in the 15s to the 16s. But this is very unusual because we should be at 16.76 on the VIX, up 57 cents. Technically, we should be at least minus 80, but probably triple digit down intraday at this point, and we're not. And that tells me this market is being manipulated. Now, is it being manipulated? Every day it's manipulated, but is it being manipulated politically? You know, you can call it anything you want. I tend to think of things politically as social interference. And I think that in a sense is kind of what's happening here in the market. The powers that be, and they are there. I never used to believe it until years ago, until I realized there is a PPI, whatever they call themselves, out there pumping money when they think it's important into the market. So with that said, the VIX is at 16.77. The market should be down sharply. The S&P should be down 10 points. It's not. It's up 5. And the S&P's the Dow's at 22. I'll be right back. Basil Chapman, Tactic Conditions Hall.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so I was asked about Nike, NKE symbol, trading at $50.49, $1.53. I don't know if you remember, but I was on air and I kept saying everything about Nike tells me that Nike's done, that it's had its day in the sun, and that they are way overboard, and that something's going on, and I couldn't explain it, but I'm just thinking that when I hearken back to those days, I was back in, I was talking about it going into December of 2015 and then coming out. And I can't remember if we did short it or not. But what I really did was I looked at Nike and said, there is something here. This is definitely a peak F in my work in the monthly, and I've got a hat trick top, and that's going to be monthly, daily, weekly, in every case. And it made a peak D in the day, that's the right arm extension. I love that kind of pattern. Fading technicals, and then it spikes up. This is that rogue wave. Remember the sign at the beach says high tide at noon, and you're sitting in the outer rock thinking, great, the tide's going out. You got your sunglasses on, you got your suntan lotion, you got all your food and your book and everything. You put your glasses on, and all of a sudden, splash! You're wiping your glasses. Say, what happened? What happened is there was that one wave at 12:06 that didn't see high tide at noon, and it came up and it went right up to the beach, got everybody wet. And then when you turned around, the real tide was out. And that's exactly what a rogue wave is. And that's what happened the week of December the 25th, right there, 68.19. It was fading. If you were short, you were 100% correct. Maybe I'll have a webinar on one of these things one of these days, because it's so fascinating. The rogue wave, just it gets you out, and everybody's out, and then all of a sudden it goes back and they say, oh man, I should never have sold them. I'm going to go back in, and the stock holds just long enough to get you back in. By the end of the day, whoosh, the rug gets pulled and it's all gone, and the shorts have gone long, and the longs have gone short. Everybody's done the wrong thing, and bam, it goes back on its business down to the downside. Nike is done. It's going to have a little bit of a bounce. I think it's really close to trying for a bounce between 50 and, I'd say 48.75 maybe, but I'd only treat it as a bounce. I wouldn't get into the stock as if it's a new long position. Next question was lumber liquidators. I don't know if I've even, peak F in the weekly chart on those peak Fs. Peak C minus, this is a very unusual thing. I remember it well. So all that bad news came out, and it went to a C minus. You can look at, I don't know how many charts you can look at on a monthly basis. You will hardly ever see a C minus. It'll be either a D, E, or F, even a G, but C minus is failure. You remember crude oil did that until I figured out, oh man, it had a parallel highs, and that was a Chapman wave phantom peak, so it did go to the D. That was back in, 2008 or 9 or something like that. Yeah, this is a very ugly chart. Lumber liquidators, boy, are they going to be liquidating very soon. Peak D in the daily, peak F in the weekly, trouble. Trouble. XRT. Oh, XRT. Yeah, I think that's part of the XRT. Let me see. XRT. Oh, XRT looks lousy. XRT is the Spider S&P, and this has the other stocks. This has Groupon, Gap, Outer something or other, Francis, Francesca, I think, clothing something or other, Burlington, Northern, Sears Holdings. No wonder why it looks so terrible. Yeah, this is not a good chart, but it's the RTH, and I spent a lot of time in my webinar, a lot of percentage time, that is, in the webinar, talking about this and in relation to what's going on with Amazon. I think this is fascinating. I'm going to put together a webinar that's going to really make you think, and you're going to turn around and you're going to say, wait a minute, why would you be wanting to do such and such if you are so such and such? And I'll explain what my thinking is, and you'll see whether or not we'll find out if it's correct thinking or not. But the charts are giving me a lot of information, and I'm really looking forward to it. Yeah, this is what I'm going to be discussing. Remember the coda phase? We're in the coda phase. And this is the chart I've been showing for months. Remember, I was waiting for wave 3 in Elliott wave, waiting for 3 to complete with 4 down. And then I said, I've been working on for the last year or so on my own Chapman wave, which kind of alternates. It does things that you're not allowed to do in Elliott wave. It's really a separate thing entirely, and that projects that we should go to higher highs. This 5 years way up in the 20,000s. That's just because of the visuals. It's not the actual price that I would extend to, but I am saying that there should be higher highs above this trend line right here, and we should go at least to 80,800s, and maybe that's when people actually come into the market. But where do we stop on the way down if there is a bad news event? Do we stop right there on that trend line at 17,700? Do we go down to the low of this candle, 17,063? Do we actually break 17,500? I'll be talking about that, and I'll show you the chart that we're using now as a template. Oh, this is going to be so exciting. All right, folks, so before we run out of time, we got Rich in Orlando. Rich, how are you?
Very good, Basil. How about yourself?
I'm well, thank you.
Good. We spoke last week about this great panther.
Yes.
And it just seems to be bouncing off of that 132. I know
Correct.
The earnings are coming out, I guess, Wednesday on it.
Oh.
But it's just like it's traveling between like the 128, 29, and it just keeps bouncing off of the 132. And I'm just wondering what your thoughts are.
So, it's funny that you mentioned it, because I was looking through different charts the other day, and I was also looking through some of my notes, and I saw GPL, and I thought, hey, let me have a look at this again, because I remember you had called, and I said I wouldn't, if it broke a certain level, I wouldn't be adding. I'd have to wait for it to make a little reversal, because it should try to get to leg D. Folks, we're looking at GPL, Great Panther Silver Limited, trading at 131, up $1, up 0.01 instead of $1.31. And what I had said to Rich is, just be careful. You said you were in at about 122 or so, and I said,
right.
I wouldn't. If it pulls back, you've got to be careful, because you don't want a peak C minus failure. But if it holds nice and can get back above the 131, I think I said 130 or 131 9-period moving area support, then you might even think of maybe that's the point where you want to add a little bit. Now, I'm going to do two things that I always like to do, look at both sides. One is, it saved the day with these long tails that went under the 9 EMA, and it kept trying to close above. I love that, because the MACD is still strong. Stochastic was weakening. It went to 66. It went under 80%. It's now at 66%. So do you have your full position where you're looking to maybe add a little bit, or just this is it and you want to see what happens?
I'm basically in it at the 120 level, and I wasn't looking to add to the position.
So that makes it much easier for me, because that's kind of the way we were looking at it the other day.
Right.
So, and what I'd say to you is, if you were thinking of another position, wait to see how it holds the 9-period moving average, and if it starts to get anywhere into the 133, 134 area, that would be a sign that it's based on the weekly chart, trying to bounce over that 9 EMA, and the fact that it has the capacity. I think it's done it before.
Yeah, that's what's concerning me, is that it keeps bouncing off of that 132, yet the bottoms keep accelerating. I mean, they keep ascending, but it's like it doesn't. It's almost like it's building to a crescendo, but it's like it can't seem to break that 132, which is kind of what I'm concerned about.
Okay. Now, you remember, I also want you to look to see, is this a stock that has a pattern of going to peak Ds? And it has a little bit of a history of that. Okay, so this is the way I'm going to look at it. At 132, I'm going to suggest that if it comes back down again to the low of Friday, which was 126. Oops, you got a moment? I got a break coming in.
No
Okay.
problem.
So let's do this. It's a good question because it kind of pertains to a lot of the gold stocks that have held well, but then did have quite a sharp pullback over the last couple of days, and now they're kind of back again. I'll be back with Rich. We're going to be looking at Great Panther Silver Limited, and we'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I had a question about NGD, also a gold stock. And what's interesting about that is that that's the pattern. I'm showing it right now, which you don't want to see. And that's what I was just a little bit afraid of, that if GPL started to pull back a little bit under, say, 122, 121, the give back would be really negative. And at this point, it's holding quite well. So, Rich, I'm looking at this. I'm looking at the steadiness of the attempt, at least in the weekly chart, to be moving higher. I'm just going to make the suggestion that if you're getting a little bit nervous about it, then why don't you do this? You even on a percentage basis, not what you want, but on a percentage basis, it's still good. At 132, give it to the end of the day or during the day, and if it takes out 131, if it hits 131, watch it closely, because at 130, I'm going to say to you, you could take a little bit off and you're probably going to get a better opportunity to put it back in. But if it starts to build energy and all of a sudden at the end of the day, it's trading at 134, that's the kind of action that's exactly what you want to see in a day like this. fuzzy day, not too much happening. You want to see your stock find support, particular support. In this case, it's the 9 EMA that we want. The MACD is still very good, and try to build up on that. And if you can do that, then there's a pretty good chance that it'll bypass this red line. I'm going to take it away. It always upsets me to see something that I don't have any real validity for. And that says that that leg C could go to a D at 141. And I would just go, step by step. You're in it. I just would say to you, don't take a loss on this position.
I would agree with you on that. All right, so I appreciate your help on that. We'll see what happens. Thank you very much.
Okay, and we can look at it again in a few days, see what's happening. But so far, it's holding with the long tails are quite good. So yeah, good luck with that. Let me know.
Thank you. Bye now.
Pleasure. Okay, folks, let's just do this. We're about to go to. You're going to go for your swimming lesson. You're going to go to Steve Rhodes. You're going to go to Dave White. You're going to go to Tom O'Brien. Got a lot of things going on today. For me, I just want you to do this. The VIX index is still holding quite nicely and holding high at 16.74. That's telling me that there are fund managers that are saying, hey, I don't know what's going on. I got stocks that have been hammered. I've got stocks that are still holding beautifully. I keep thinking the market's going to tank, and it's not. The VIX index is saying the market should be tanking, and it's not. So if the VIX index suddenly, at the end of the day, drops from 1671 down to 1630 or lower, you'll see a nice bounce in this market, just trying to ameliorate the market as being a force in the election at all. Just they don't even want that. They've got enough, right? That's number one. Number two is if the VIX index refuses to pull back and starts to move towards the high of the day, which is at 1713, goes towards the high 16s, just be a little careful. And I'm saying, in any case, this is a time, if you've got cash is fantastic. There's nothing, cash is a position. That's number one. Number two is, if you've got stocks that are holding well, fabulous. Just raise the stop on a portion of them to have some protection. That's fine. If you've got stocks that you think that should be doing well and they're not, I'd be very careful. I'd actually take some of that off. I'd use that money as cash. Cash is better than cash going down or stocks going down. Be very cautious at this particular point. Why? We're already subject to internal news. 100 points up and 100 points down is very easy, but it's the 300-point move that's going to be a real surprise. Where's it going to come from? What's it going to do? You just got to be ready for that now, even though you've got the Fed, maybe the Fed, somewhere sitting there just trying to back the market up. Be careful. That's what I'm saying. When I do my webinar on Wednesday night, I hope that I can give some clarity of thought to what if this and what if that. What should we do? How are we going to position ourselves? We've already tried to do that in our position. I'll be back tomorrow. Have a wonderful day. Check out the front page of TFNN for my webinar on Wednesday night, and you can start getting my newsletter. Hey, have a great day. I'll be back tomorrow. Stay tuned for your swimming lesson.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.